Hi everyone. Today we are going to talk about spotting multibaggers and building wealth. So, what is a multibagger? So, multibagger is an opportunity where the investment in a specific company multiplies several times. For example, you invest 100 rupees in a company. Let's say it becomes 1000 rupees. It is a nine bagger for you. Similarly, let's say we invested 10 lakhs in a specific stock. Let's say it becomes 5 crore in a period of 3 to 5 years. It means that it is again a 49 bagger for you. So these kind of multi-bagger opportunities actually build your wealth. So typically you'll have 15 to 20 stocks in your portfolio, and eventually some of your stocks should go on to become multi-baggers. The more multi-baggers you have in your portfolio, the net worth of your stock portfolio will go up very fast. You can quickly become a millionaire. You can fast track your wealth building. The most important thing is identifying multipaggers. So let's see more details about how to spot multipaggers. So let's say, what if you could invest in the next big winner and grow your wealth exponentially? That is where this video is targeted towards. So imagine you're investing in a company which grows 10x over a period of time. That is how the power of a multi-bagger, the power of compounding works. So it can make a huge difference to your portfolio. Let's say you have a 10 lakh portfolio. It can quickly become 2 crore or 5 crore. So your net worth can grow very fast if you have a lot of multi-bagger stocks in your portfolio. So there are some common traits, there are some specific characteristics that are present in all these multi-bagger stocks. So this is a series where we'll talk about each and every trait that is important for a stock to become a multi-bagger. We'll talk about each and every one of them. So we'll take a stock as an example. We are considering Cera Sanitaryware. This is one of the blue chip companies today. It is a large cap today, whereas 14, 15 years back, it was a company without any name or brand for itself. It was trading at 100 rupees in the year 2010. I purchased it at around 150 and then I sold it at around 300 rupees. Now I regret that I did not hold on to this multibagger for a long period of time. So now if you look at it in 2024, it has gone up to 10,100 rupees, which is a proper 100 bagger in a short period of time. So there are so many companies. So several thousand companies are listed in the Indian market in BSE and NSE. Only certain companies, only a few handful of companies will go on to become a multi-bagger. So what is common among them? What are some of the most important characteristics? Let's see what sanitary ware Cera company had. So the most important trait of a multi-bagger stock is TAM, TAM, TAM. So what does TAM? TAM means Total Addressable Market. So if you look at venture capitalists, they typically invest in startups. The most important metric they look for is TAM. How big is the market opportunity? So if the market opportunity is very big, and if the market is going to keep expanding, if you have a reasonably good team, you'll be able to grow and scale the company and also become highly profitable. So if you look at any company that has become a multi-bagger, be it Page Industries, be it Royal Enfield, be it Eicher Motors, be it Cera Sanitaryware, be it Astral Pipes, if V-Guard or the recent multi-baggers, even HDFC Bank, all of them have a very, very big addressable market. So if you have a market which is very big, and if you're able to identify a niche, if you're able to build a brand, build a product, and if you're able to scale really well, then you're obviously going to become very big. So numbers will be followed by stock price movement. So TAM is the most important thing. If you want to invest in a specific stock, always look at the market size. How big is the market? Where can I start? Uh, what is the maximum revenue potential that this company has? So if you look at Cera Sanitaryware, Sanitaryware, Fucketware, it including all the products within that company, it is a 25,000 crore market for this company. So they only had around 200 crore revenue, 190 crore revenues in 2010 out of a market which is 25,000 crore. So they are barely capturing 1% of the market share long back. So imagine if they are growing and becoming one of the top five players in the market, then they're obviously going to have a huge chunk of this market. So, so this is where it is a clear category where it is one of the many players in the market, but it has been able to scale and grow to 1,800 crore revenue. And still, if you look at it, it is still a 25,000 crore market. There is huge urbanization happening in India. Everyone wants to have a house. Construction as a sector is growing, and people are becoming brand conscious. And not just urban areas, even in rural areas, some of these brands have become very popular. So, because of all these reasons, Cera can continue to grow. There was a consolidation a couple of 2, 3 years back. So, it started consolidating. The revenues did not grow as much as expected, but even then, still the market is very huge for Cera to keep growing at a decent pace. Uh, w- uh, we spoke about TAM, and the next one is growth. So, market always expects consistent, predictable growth. So, you have to be growing consistently. You have to be showing predictable growth in your numbers. So, Cera Sanitaryware remained a growth stock for several years with a CAGR of 30%. It was growing 30% every quarter. Sales growth 30%, profit growth 30%. Similar operating margins, it started at 15 to 20%. So it continued to scale, it continued to show exorbitant revenue growth. So because of which the stock price kept multiplying. So it started at 100 when it was available at 100 rupees. It had a revenue of around 200 crore, and now it's at around 1,800 crore. So a 10x growth in revenue has resulted in 100 pack. So you can see 10 times the revenue has grown. Profit has also grown 10 times. 190 to 1,800, 20 crore to 230 crores. So highly predictable, highly consistent, solid compounder. It keeps growing revenues, it keeps growing its profits, it keeps growing its cash flows. So obviously the stock price will keep multiplying. Even if it still remains at a very high valuation, it will continue to compound and give you phenomenal returns. So that is how it works. So the first important trait is TAM, total addressable market. The second thing is the performance of your company in that industry. It has to keep showing consistent, predictable growth. So basically, at 200 crore in 2010, we should have thought of whether this company has the potential to get to 1,000 crore revenue. So based on these numbers, you can find out yes, there is tremendous scope to get to 1,000 and then to 2,000 crore. So does this company's team have the capability to get that? That is the next question you have to ask. So the next thing is strong leadership. So how good is your leadership? How good is the management team operating? And in Cera's case, it is one of the top three players, top five players in the industry, and it eventually became a top three player. This is another thing. So there are industries where you'll see monopoly, duopoly, and then there are industries where you'll see four to five players competing with each other and doing really well. And that is where Cera started very small, but it kept an industry where HSIL was a leading player. Then you had Kajaria and a lot of other companies, but still they were able to hold a leadership position and maintain a strong hold in the market. So, it, based on these traits, it will eventually become a high ROE business. So, we'll talk about other important traits in another video. Thanks for listening. If you are happy to listen to this video, if you find it insightful, please feel free to like, share, and subscribe. Thank you.